90% of options traders lose their account, blow it up for one reason. They're playing the game upside down. You're buying out of the money call options because you're hoping for a spike. It's a lottery ticket. Yeah, you see it on X, you see it on Reddit, wherever you guys are seeing these sort of portfolio gains. It's not realistic. It can happen, but if you research it properly, you will see that majority of people that make their money that fast in the markets lose it just as fast. Why? Because they've made a 3 to 10x and they're looking to 10x it again. It's not going to happen. The best way to actually make money consistently in this market is actually by selling options. If you have a portfolio, if you're looking to get into the market, it works both ways. You're leveraging your own account, but not with margin that's going to destroy you. You actually have skin in the game and you're using margin effectively. Such as right in front of you here, I show you guys and I work through everything completely legit, whether it's the losses, whether it's the gains, because that's how it should be. I'm 25 years old. I've been selling options for over 5 years consistently. This is a brand new account that I've been doing it for over a year. I've deleted a lot of the videos on the channel because I want to start fresh. You can see here, I've catalogued everything and the reasons as to why I entered the trades, just for my own psychological benefit. I can look back and say, okay, this is what I've done. So I'm sharing that knowledge with you guys. I am a portfolio manager. I was an investment analyst before this, and I coach numerous people, 10 people every single month, to actually grow their own portfolios. And I'll go through a live example as to what I've done last week and how it's benefited another guy who's I'm mentoring currently. And it's been going really, really well. So you can see here the last trade that I actually took. I sold a put on ASTS and it was the $64 put. So what actually happened here was ASTS came down to $53 and it was oversold on practically every single indicator imaginable. I'll go on there right now and show you guys this. But make sure you guys stay tuned to this because I'm going to explain all the reasons as to why I entered this trade and why it's beneficial for you guys to actually engage with this strategy. And if you have got at least 100 shares in any stock, this is applicable to you because that 100 shares you can sell a contract against. For example, if you have 100 shares of ASTS, right now it's at just under $71, you can sell a covered call saying, okay, I'm happy getting out of my shares at $80 on Friday. So it's a 3-day expiration. And it might pay you 0.5%, which doesn't seem like a lot, but if that does happen, you're getting the capital gains from $70 to $80. So you're getting about 12% gain there. And you're getting that 0.5% cash instantly. That's the benefit of this. And you can go out a month and say you're happy at 100 and you can collect 1.5%, maybe 2%. Depending on your risk appetite, you can go closer to 90 and collect 3 or 4%. And that's in 1 month's time. So, and if the stock doesn't even go to 90, you're still going to collect that amount. I'm sure you guys are familiar with the strategy. If you are, just smash that comment, smash a subscription so you guys don't miss a single video, and hit that like button as well because it does help bring this video out to more people who need it and want to learn. So I got into the trade right here. So we were at $54, around $53, $54, and I sold at 64. So it is a bit stupid. I practically said, whilst we were at $54, that I'm happy paying for a large amount of shares, 2,000 shares, 20 contracts at $64. So I was agreeing to the broker, like, hey, the stock's at 54. I'm happy paying $10 more per share in a month's time if we are still below 64. Why did I do that? Well, you can see right here in my spreadsheet, it was paying $8 per share. So it was paying about between 12 and 14% per contract. So to me, it was a no-brainer. The collateral, it was about $129,000. You can see there the collateral used, collected $16,000, and it was a 12.5% return in a month. So to utilize these strategies, that's how I do it, and it is consistent because I was expecting a bounce, and what's happened so far, we have bounced. Okay, I have in fact closed these positions. I've closed it. I have not updated that right here, but I have closed it. I can update that right now, but it will take a bit of time. So in the next video, you'll see an updated one right here at the bottom saying closed, and this will go, there'll be a red one here showing that I closed it and it cost me to close it. So this wasn't 15,998. In fact, it was probably 10,200 because it cost me $5.5 to close that option. But a real example that one of my let's call them clients did. So it was on Nvidia, okay? And this is an individual with an extremely large portfolio that is in options trading, but wanted to perfect it. And no, sorry, that was another client. This is in SpaceX. So space is obviously going to be one of the biggest sectors in the world. And this video might drag on a little bit, but make sure you stay tuned because it's extremely beneficial. So this is what actually happened. If you want to find out how the big boys trade their account, this is how they do it. So this individual bought a heck of a lot of shares of SpaceX at $112. Okay, right around this level right here. We're just gonna say they bought 100 shares just to keep it simple. 100 shares. They wanted to buy more shares at $132, but they were worried because they already bought shares at 112. They didn't want to increase their average by buying at 130. So what we did instead was we sold puts at $100 and they collected $13 per share. So in 2 months' time, if the stock is below $100, at or below $100, they have to buy shares, which is good for them because instead of buying at 130 or at 112 where their base entry was, they're buying at $100 and they collected that $13 per share. However, because they collected that $13 per share, it actually brought down their average to 87 for that amount that they're saying they're happy buying at $100. So they've collected premium, they've lowered their average if they get assigned, and they're being able to buy into a company they want to own for much cheaper overall. So, and the quantity that they were buying is in the thousands of shares. So you can kind of see how it's attractive to, rather than FOMO into the market right here, where you could easily see a pullback to 110, 120 before seeing a quicker move upwards. You can see how it's beneficial. But it doesn't mean that you need to have a stupidly humongous portfolio size to reap these rewards. You don't look at the dollar gain. You look at the percentage gain. If you have a $10,000 account, $20,000 account, you can do this exact same strategy and get the same percentage rewards. So your account is compounding just as fast as the guy who's multimillionaire. And it will just take you a bit longer to get there, but you're still getting the same compounding returns that these individuals are getting. And that's what I tell people. It's not about dollar amount. You don't focus on the dollar amount ever. You only focus on the percentage gains. If you're in the market, if you're in the stock market, why are you in the stock market? You're not going to look at your dollar gains because no one starts off as a millionaire. You always start off looking at what's the average return? What's my expected return after 12 months' time? And that's how you gauge with, is it worth me putting my money here? Otherwise, everyone's just going to be investing in government bonds to get the 4.5%, 5% guaranteed return. You're in the stock market because you want to beat that bond amount, isn't it? Or you're in individual stocks like SpaceX, Nebius, Nvidia, because you want to beat the index. It's averages at the end of the day, so you want to just get into the market. But that's it for today's video. If you guys found it useful, found it interesting, make sure you subscribe, hit the like button, and comment down below if you're investing in the market. And if you want to get started, book a free call with me down below. Half an hour, get me on the phone, and I'll just see where you guys are at, what your goals are, and we'll work towards it. That's it. It's that simple. It's free. I'd love to talk to you guys and see where we're at. But yeah, I'll see you in the next one. So thank you all for watching.